are all users, consumers, builders of digital journeys. We are not alien to the concept anymore. We all use our mobiles, our tablets, our PCs, our laptops to engage with various stakeholders, various government agencies, various service providers through digital medium. So digital journey is, I think, a word that requires probably the minimum time we spend on it. Intelligence is something I already talked to you about, that, it's primarily an ability to learn, to adapt, to deal with abstract concepts and to solve problems. You would notice that to do all of that, first thing you need to have is a good observability. You need to understand what facts are. You need to understand where the problem lies. And that then can be applied to our intelligence to come at an effective problem solution. Integration, of course, what earlier used to be primarily a monolithic system. So a few years back, just about 10 years back, a large organization having large investment in IT, having best of the class, practices in terms of high availability, resilience, reliability, they were the best. There was no question about that. People who could invest were the best. Today, unfortunately, that ecosystem has become fragile because integrations are now mainstream. There is no system that runs without integrating to various other systems to provide us, the consumers, the information that we need to act on. So integrations have become commonplace. Intelligence is something we talked about, and we said observations, data, facts are very, very important for us to really apply our intelligence. Otherwise, we don't know what we are solving for. And when we talk about this, it is kind of intuitive. You would have understood that as our dependence has increased, failure probability is increasing, and building reliability is very important. I would hate to have a system where on Monday I can book my train tickets online, but on Tuesday I have a problem. I want to have it available to me every time, anytime, day or night. I may want to book a ticket at 4 o'clock in the morning or 12 in the noon. It should be available at my beck and call. That is the expectation. That is the experience that I would. So we talked about the increase in ecosystem interdependence. Now, this is really not a dependence that is that has a negative connotation to the word that we want to bring into our discussion. The more appropriate terminology is interdependence. Fintech providers, API providers, they depend on consumers. And consumers depend on ecosystem providers to really stitch together a system that makes sense and enriches the system that is being made available to the end consumer like you and I. So if we look at various layers that are involved in this ecosystem, we see that there is a public digital infrastructure, that has come up, and we can all be proud that India is one of the leading countries in the world to boast of a very robust and very widespread digital public infrastructure. We have payment processing like this use case or this particular achievement is quoted globally all over the world in terms of how many billions of payments are processed every day through digital channels, and fairly reliably, I would say. I have yet to experience a glitch where I made a digital payment and it didn't go through, or when I was charged twice for an attempt to make a payment. So that's something to be proud of. But it also is an opportunity to look into what it takes to build that kind of experience and what are the slippages that could ruin that experience. Now, unfortunately, or fortunately, I would say, not all systems are as critical as digital payment systems. There are a variety of systems that are today deploying digital technology to increase the reach of the business, to accelerate customer acquisition, to improve customer service. So all these systems, maybe not as critical as making an online payment, are nevertheless extremely important because a bad experience can turn away a customer from you, and we will see what kind of impact it can really have. So we have at the bottommost layer, public digital infrastructure providers, people like Aadhaar, UIDAI, or NSDL, which provides the PAN card verification service, credit bureaus, which provide us with information that bankers and lenders need to use day in, day out when they are approving or rejecting a certain application. Over that, we have a layer of API providers. So public digital infrastructure, of course, is a specialized area in itself. As you can tell, catering to 130 crore citizens of the country every day, requesting this information requires extremely large, scalable, reliable infrastructure. Very, very sophisticated technologies at play to ensure that availability is 99.99%, that the experience is seamless, that the performance is guaranteed, and that the systems are able to scale. The API providers use the digital infrastructure, digital public infrastructure, as a conduit to transmit this information to the consumer. And consumers are lenders, are bankers, are various other service providers that use this information from the digital public infrastructure. Now, availability is only one aspect. Performance is another. So while API providers also provide extremely high degree of availability, which ranges in 99.9% range, the services provided within SLA are observed. And I'll tell you what kind of setup we have to observe that. And of course, we have interactions with various bankers and stakeholders, and we know from their experience as well that the within SLA services roughly drop down to about 99.5%. Then comes your consumer application, which you use to interact with your customers. So for example, if you're a bank or a lender and you are interacting with the end user or consumer of your services, they do so through a specific digital application that you have developed with your partners. They use these applications to avail of the services downstream. And these applications are also subject to failure. So they also have a certain availability percentage. And finally, all this information, once you gather and collect, gets integrated with your own internal core systems. It could be core banking system, it could be your claim settlement system, it could be your loan management system. So they are the core systems, and they too are subject to failure. They too have a certain degree of availability. All of which, of course, very mature, very sophisticated, promising extremely high availability, and generally is the keyword, generally providing a good experience to the customer. Now let's try to look under the hood and see where the nuances lie. One thing you would like to notice, I'm sure, the right two boxes are more to do with internal systems. They are systems tightly within your control. They are the systems you can observe. They are the systems you can manage. They are the systems you can govern. The systems, the boxes on the left, API providers and digital infrastructure, they are the layers where observability is not as good. And to just put things in perspective of the challenges involved in solving visible versus invisible problem. And I'm taking a lot of time on the first couple of slides to really set foundation for what we want to discuss. But bear with me. So I was also looking up an interesting statistics, and I'll share some facts with you to drive home a point that solving problems which are not obviously visible are far more challenging and far more difficult. Now, some facts. The total number of lives lost, let's say over last 100 years of human history, or 150 or 200 years of human history, to wars and ravages across the globe, amount to about 1 billion people. We would have lost about 1 billion lives to crazy, mindless acts of war and violence globally. During the same period, if we consider the lives lost to natural catastrophic disaster, that number would be about 0.5 billion. And these are very, very visible, very, very controllable, sort of, well, not as controllable. If it were controllable, we would see a more sane world around us, but we don't. But these are observable facts to which we can have a more measured response. Now consider the lives lost to smallpox, 0.5 billion. Lives lost to other serious ailments caused through bacterial and viral infections like tuberculosis, 1 billion. We've solved that. It has taken us 200 years to solve it. So invisible problems, the more invisible they become, the harder it is to find a solution. And our today's discussion is going to focus largely on identifying some of the cues in the hidden data, in the hidden problems, and how we can best equip ourselves to solve that. We'll move on, and we'll talk about, and when we talk about integration, obviously we are talking about extending beyond the boundaries of an organization into the outside world. And when we talk about that, there are certain dimensions to this ecosystem. Dimensions like data privacy security, dimensions of resilience, dimensions of integration efficiency. All these dimensions become extremely critical in ensuring a smooth, seamless experience that our consumers get to experience from our endeavors and adoption of technology. On the right-hand side, you see a number of stakeholders within a large organization. Like, these are all very, very large, multi-billion-dollar corporations today. And they have multiple stakeholders. Like, there is a business department, there is a credit underwriting division, and there is a IT department, and there is a compliance, there is a procurement division, and all of them have their own perspective. All of them have their own priorities. All of them have their own concerns and questions that they want to ensure before this extension to external ecosystem is allowed or implemented. So for a large bank, getting an API provider on board, technically it's a simple problem. It can be solved in a day, but it often takes 6 to 8 weeks because it has to go through various policy, compliance, procurement, regulatory lenses, a business lens, whether it makes economic sense, whether the data you are going to send out and bring in, whether that is secure enough, safe enough, whether it is reliable, whether it is scalable enough. Are you being offered the best price for it? All these concerns surround every single integration you want to bring in to your organization. And therefore, this becomes a complex exercise. What can technically be achieved in maybe 2 days actually ends up taking 6 to 8 days, and rightly so, because none of these concerns can really be ignored. In today's discussion, of course, there are 6 dimensions that I spoke about, and this would be too short a time to do justice to even personally go through all 6 of them. So we'll focus on just a couple of them. We'll focus on resilience. We'll focus on integration, efficiency. And we'll see what are the obvious problems that we experience. And I speak from experience, as Decimal, over its course of 15 years or so, has implemented more than 150 digital transformation projects with several large organizations, the kind of whom you represent today. And that learning, what we have learned from them, the insights we have gathered from them, have been extremely useful in our forming an opinion, our forming a stance, our forming a strategy on how best to handle these challenges that come along with external ecosystem integration. And we are trying to share that with you over a course of next 15 to 20 minutes. So let us look at resilience. Now, as we saw earlier, resilience itself has several layers that we spoke about. And those layers, the resilience could break because of an issue with your data source infrastructure that we talked about, the public digital infrastructure. If there are problems there, if they experience an outage, if they experience a performance bottleneck, there can be an issue that flows down to your consumer of a digital journey applying for a loan at that particular time. Same with API providers. The nature of the issues then change. It depends on what kind of contract you have with them. It depends on what kind of performance they are able to deliver with them. Very often, a failure is not really a breakage. A failure is not visible in terms of hundreds of people scrambling, trying to fix something that is broken. So when I was studying my engineering, we used to say, mechanical engineering, it is easy to spot failures, but very, very difficult to fix them. You can see that a bridge is going to collapse, but to make an effort to stop it from collapsing, the repair work is extremely difficult and time-taking. On the other hand, when we talk about electrical problems, they are very, very hard to detect, but very easy to solve. Once you have detected, it's probably a matter of joining 2 wires. So when we talk about provider issues, very often just a response time increase from 10 milliseconds to 15 is going to break your journey. Why? Because while defining your journey, you have somewhere incorporated a logic that the timeout allowed within that journey is 10 milliseconds, which was based on how you had benchmarked this particular provider's response time. Now, if that provider, mind you, there is nothing broken. This provider is still working, API is working fine, everything is going perfectly. But if your application had waited 15 milliseconds, it would have been successful. But unfortunately, you don't change it from interaction to interaction. You design an integration. And here, I would like to introduce briefly the concept of the difference between integration and interaction. So integration is something you design once. Interaction are millions, in billions. They are each individual interaction that happens over this integration. And that interaction depends on what is the performance at that point in time. If at that point in time, the response time, for whatever reason, maybe there was a Diwali sale and the traffic shot up 5 times, and the provider's response time dropped by 5 milliseconds, it's going to maybe result into your journeys failing in thousands. Right? There can be commercial issues. But very often, it's very complex to monitor commercial contracts with hundreds of API providers in terms of what is the quota you had signed up for, whether you are exceeding your quota or limit, whether your contract is expiring, or whether you have upgraded your system to the contractor's latest version. There could be a number of issues there. And finally, the application issues. Your applications themselves may at times misbehave in terms of they may send a bad request. They may send a request that does not have a legitimate key for that interaction to fetch the right information. So the causes of failure of a particular interaction, and that is what is important to us. What is important is not that you are servicing 500,000 customers happily over a period of 1 month. What is important is that you did not serve 500 of those customers happily. And we'll try to see what could be the cost of that. So going ahead with the myth, and I call it a myth, because we all like to believe that our systems are resilient. They all are designed for 99.99% availability, 99.9% availability. We have DR in place, we have business continuities, we have one data center in Delhi, another in Hyderabad, third across the ocean in Japan, so that if one data center goes down, the other doesn't let me fail. All this is very good to reach up to 99.9. But when you integrate with an external system, you are forming a cascade. You are forming a link of multiple integrations that need to work, correct? Within SLA, reliably, every single time. And this gives rise to possibility of a probabilistic failure. And when you look at a probabilistic failure, today, if you look at a modern digital journey, they easily consume 30 to 35 APIs, internal and external. But at any rate, at least 15 to 20 external APIs in terms of doing your KYC, your bureau checks, sending OTPs, whatnot, going to account aggregators, and this is increasing. As we speak, the more and more fintechs are coming in. As we speak, AI is making an aggressive foray into providing information that wasn't possible to even imagine a few years back. Now you have that information available. If you have it available, you want to use it. If you want to use it, you are using an integration. If you are using an integration, you are increasing that cascade, that chain of failability. And when you do that, the probability of failure goes up. So on the right, you will see the probability of failure growing as the number of APIs grow. Now, I'd like to point out for those of the participants who are more mathematically inclined, that this increase is by no means linear. This is a representation. It just shows that failure rate increases as the number of live API integrations increase. Sometimes this increase is exponential. The key word here is how many critical dependencies you have. You may have APIs integrated, but only 5 may be critical, which will stop your journey. You might have designed it in such a way that others don't really impact your journey. If that is the case, you have 5 which are going to cause exponential increase in probability of failure, but the others causing a linear one. In any case, through a representative example, we can metaphorically say that what we believe to be 99.9% available, in effect, in practice, gives you almost 7 to 8% failure rate. And this is not just an academic theoretical calculation. This is something that bears out in our own little experiment, in our own little R&D that we've been conducting over the last 3 years. I'll share some of that data with you. But this fact stands verified as we speak today. Now, the interesting thing, who is this failure visible to? If your core banking system goes down, everybody from your architect to your IT department head, to your CIO, to your business head, to your credit head, to your CEO even, they are all going to be on their toes. Everybody knows the bell goes off saying that core banking system is down. When a digital infrastructure goes down, who knows it? Your bank representative sitting in front of a customer trying to onboard that customer, he knows it. That unfortunate customer who's trying to open his account, he knows it. Nobody else knows that. The data is buried deep into your logs, into your traces, into your observability dashboard. But you get to see it. You got to analyze it. You take action on it. A month, 2 months, 3 months down the line. And then you take months to decide what is the right solution. And then you take months to find a vendor. And in that time, you have lost thousands of customers. So important thing is digital journey reliability is not the same as API availability. When digital journey fails, the pain is not felt as much as it is felt when your core banking system or LMS system goes down. This is the problem we want to address today. This is the problem we are trying to solve today. So let us see what happens when this unfortunate incident happens. I can tell you from my experience, I was trying to renew my insurance premium to my digital level. And I had challenges. I don't know whether I was not using it right, whether the APIs were failing, whether the application was not right. I don't know. But in a couple of attempts, I couldn't do it. Now look at how market has become. From that attempt to the next day when I would try that again, because I'm not going to sit all day trying to pay my premium. I tried it for 5 minutes in the morning. Then I started getting ready for my office and forgot all about it till the next day. In that 24 hours, I received 3 messages on my phone from other insurance vendors saying that here, we have a better option for you. We can offer you lower premium. We can offer you better benefits. Potentially, you have lost a customer. I didn't switch loyalties. That is no virtue to myself. There are thousands who will do it. And why not? If I'm going to save 10,000 rupees a month or 5,000 rupees a month just by switching provider and enjoying the same benefit, why would I not do it? Why would I wait for your bank RM to wait for 10 minutes for a connection timeout request to get fixed before an account is opened? I'll politely ask him to leave me to my work and I'll go to the next bank's website and open an account. A saving bank account is a saving bank account for me. I'm sure you all have brilliant differentiators built into your offering, but not every customer is aware. And right now, my purpose may be just to open an account, not enjoy a free lounge access or not enjoy 20 shopping vouchers that you present along with your offer. So a simple glitch causing a disruption of 5 minutes in onboarding a customer is a potential loss of revenue. Potential loss of customer. And guess what? Far worse, it erodes your brand trust. Your bank may be fantastic in managing NPS. You may have the best ratios across the industry. You might be the largest. But if I have 2 failures through digital channel, I'm going to have a very different perception and probably justifiable. In any case, it is a hard question we need to ask ourselves that today, because of a slight glitch in your integration ecosystem, whether by way of a failure or whether by way of a slight delay in response, how many customers did you lose? What damage did it cause to your brand? What was the impact of this failure? Unfortunately, there are no easy quantifiable answers available. But we all can say from experience, from extrapolation, from our own customer feedback, that the damage is immense and it is highly avoidable. I'm sorry. So as a very, very simple example in terms of defining what resilience could be, it need not always be very difficult. When I want to come to my office, I take a certain route. If my map tells me that that route is very congested, it takes very little effort for me today to explore an alternative route. And if that is traffic free, it is easy for me to take that route and reach office still in time without suffering the pain and frustration of getting stuck in the traffic. Same with API. Fortunately, although the digital public infrastructure is non-redundant in the sense that there is only one provider, there is only one NSDL, there is only one UIDL, there are not 10 of them. If they fail, you and I are equally helpless. There is not much we can do about it. The whole country will face this challenge. The whole country will face this outage. But what if I'm mentioning some names just for reference. There is no intention beyond that. Suppose I'm using an API provider called Perfuse to do my KYC, and I experience a certain slowness or a glitch. Suppose that timeout I had set in my application was 10 milliseconds and I didn't get a response. It takes very little for me to try another channel, maybe ID5, and see if I get a response fast. If I get a response, my journey continues. This is resilience in action. The challenging part is, have you built it? A bank has hundreds of products. Those products have tens of variances. So arguably, you have many hundred digital onboarding systems in operation at the same time, coming from different vendors, addressing different solutions. Have you built it in every single journey? If not, after seeing this diagram, is it possible for us, or is it motivation enough for us to say, let's go and change all those 500 journeys and put this failover route where we haven't put it? You might already have put it in some places, but to ensure that you have done it in all 500 requires extremely high governance, extremely high control over each department, each vendor, each product team, which in our experience we have seen is not easy. So the same bank, the same departments, for some application, they might have built an extremely resilient journey. For some other team, other product, it may not be as resilient. So to build this resilience uniformly, easily, in retrospect, in hindsight, is something valuable. We need to see, is it feasible? Is it easy to do that? One answer is consume capabilities, not just raw APIs. So I'm now going to shift the burden of building resilience from your journey on to something else. Suppose your integration layer had the intelligence to first try, and now we'll take an example of, let's say, credit bureau check. So I'm applying for a loan to a certain bank, and the bank is performing an online credit check saying how much loan they can give me based on how much is my current obligation, what is my income, what are my liabilities. They fire, with my consent of course, they fire an API, let's say to TransUnion Civil. And the TransUnion Civil is taking a little longer than it should. Your application shows a failure, and the integration layer automatically has the intelligence to switch to another provider, let's say Expedia, and give me the response so that your response time is met and the journey carries on. Now this entire resilience package can be built into your integration layer without your journeys having to change. Let us extend this concept a little more. When you do a KYC check, it is not just calling one API. You probably call several APIs in sequence. You orchestrate. There is an OTP API, there is an Aadhaar API, there is a PAN API, there is a name match API. So there is a collection of 6 to 7 services that are required for you to say whether the KYC is accomplished successfully or not. In today's journey, in most of the journeys, and I'll be honest with you, in many journeys we have built for our customers, all these things are built into the journey itself. Now somewhere there, and one team may have extremely good integration engineers, which has built all these services very, very carefully with bank compliant and bank specified timeouts, bank specified contract rate limits, etc. Some other team may not have. So you may experience that PAN services as serviced by, let's say, NSDL and made available to you through Perfios are operating perfectly fine for your current account onboarding. But for saving account onboarding, those journeys are failing. Because the people who built those integrations were probably not as careful about building those thresholds and guardrails into their application as the other team was. Now, how many vendors, how many internal product teams, how many consumers are you going to exercise this control over directly? It makes a lot more sense to build this intelligence into your integration layer and let your journey be independent. So today your journey calls PAN and then Aadhaar, and it sends OTP first and then OTP again. And then it calls another API to match the name they have found. And then they give a response whether KYC is done or not. Tomorrow, your journey itself can get simplified. And within the application, it will just perform KYC check. The rest of the logic gets transferred to your integration layer. And mind you, this does not impact the workflow or the business logic at all. So if you have got your application developed, none of the business logic, none of the workflows that you have built there change. It is just the orchestration of API that moves to the integration. By building such simple capabilities and stopping to deal directly with raw APIs, it's a great way to build resilience by making the integration layer a little more intelligent, a little more useful. So these are the four pillars of the control plane that we spoke about that you require within the integration framework for you to be able to move the integration logic, the orchestration logic onto the integration layer. We'll not spend much time on that, but I'll show you the box on the right tells you that we had talked about 5 or 6 different dimensions of reliability. Out of that, we focus in today's session just on reliability and on contextual intelligent integration. And through that, building efficient integration, building better reliability through abstracting your API into something you can call a capability or a business function. You can easily envisage that. Through doing that, you are able to ensure a much better resilience as compared to dealing with raw APIs. I'll tell you a little about Vahana Hub. So this being kind of our secret, it's been an R&D effort we've been pursuing for the last 3 years within DCode. And we knew even then, because we were dealing with digital transformation projects, we were dealing with APIs all the time. But we saw that number of APIs were increasing. Earlier, there were just a few mandatory checks. Now, the number of APIs we use, one of the latest onboarding solutions we have created for one of our esteemed banking customers, uses north of 30 API integrations, external API integrations. There is so much intelligence gathered about the customer, of course, with customer consent and through all legitimate channels. But there is so much intelligence gathered. There is so much possible to do. The banks want to do it. Performance is good. The time and the latency are all within permissible limits. The journey is still great, and it allows banks to mine its customer intelligence a lot more meaningfully. Drive your cross-sell and upsell campaigns far more intelligently. It allows you to enrich what you know about your customers so much more just through a simple product onboarding journey. All this is possible, and we saw this trend. But like all of us, like many of you who have been working through this, like many of us who have been trying to solve this, the problem was obvious. The solution wasn't. And we said, if we take something to market now, we have nothing to prove it on. These are just opinions. These are just ideas. And customers don't buy ideas. You have your own ideas. You have your own opinions. You have your own experiences. I can bring value only when I put some data in front of you. Only when I put some real-world experience. Only when I put a real-world platform that has enabled me to gain this insight in front of you. So we had this little R&D effort going. And we onboarded just a few marquee customers, and you can see our valuable patrons. Their names are there, only some of them. There are in excess of a couple of dozen people who participated in this. We created the service in a SaaS mode, and we allowed them to use our Vahana Hub platform to perform their integration by abstracting APIs into capabilities, by building resilience by building failover. And you will be surprised. 15% is the number of, and this is, I'm talking about more than 100 million API hits managed over years. We have seen that 15% end up using our failover capability, which means in 15% cases, there was a need for the application to explore an alternative channel. 15% is a number that represents internal and external integration. If you separate them out, and we saw that again from observation and from data, roughly 50% pertain to your internal integration and 50% for external. Now, this 50% internal integration also has a huge opportunity in terms of our providing you the feedback. We were able to tell our banking customers that, Mr. Customer, your core banking API so-and-so is failing the most. We were able to point out that your certain external API integration on weekends, between certain times, the response time goes up. Based on the data that we collected through our effort, and these are some of the numbers, we have 1,500 pre-integrated APIs available on the platform today. More than 70 API providers are represented. Over 50 million hits have been experienced and managed by us. And over 3 years, we measured our uptime to be 99.9%. Now, based on this evidence, based on this data, we are able to stand confidently in front of our audience and say, hey, we experimented in our own private R&D setup. And why do I call it R&D? Because this was not really for commercial money making. This wasn't a profitable commercial venture. We provided this, we created this infrastructure, we created this team to serve only a handful of customers. Of course, the innovative part of this was that the experiment paid for itself. We didn't burn money of our own. The patrons, the customers who agreed to use our services were kind enough for all revenue generating because they were getting real value out of it. The only reason we did not scale it out was we wanted to internalize the learning first, to build those features which were beyond our imagination at that time before we made it available to our customers. And now when we want to make it available, the biggest question, and of course, I'm sorry, I'll just pass through the screen, but these are some of the measurable benefits that you can experience when your integration improves. Your GTM becomes faster. Today, when you design a new journey and you have to design integrations, let us say 10 APIs are available on bank's API gateway, 2 are not. Now, we spoke about what it takes to onboard 2 extra vendors into your ecosystem. Forget it. Now your chief architect, now your product team, now your IT team, now your security and compliance team, all of them, now your procurement team, all of them are going to ask, why this vendor? Why do we need it? Do we have an alternative available? Is the vendor robust enough? Will they be reliable when we scale? Will they erode my brand equity because of their failures? That evaluation, gentlemen and ladies, is going to take you 6 to 8 weeks. With Vahana Hub, you get them pre-onboarded. You don't have to worry about onboarding. You get the APIs pre-integrated, pre-configured. You simply plug into Vahana Hub and you consume it. It improves your go-to-market effort. It reduces your operational cost of managing hundreds of APIs and tens of vendors. It brings genuine benefits. And the biggest thing we want to tell you now is that now this platform is available to you for a dedicated deployment behind your firewall if you wish. If you wish to use our SaaS infrastructure, it is available today. You can sign up and you can start enjoying these benefits today. If you want to bring this infrastructure behind your firewall, bring it under your control, keep the control and governance tightly under your control, it is available for private deployment as well. So thank you very much. I think I have finished on time, maybe a couple of minutes more. But out of the chart that we saw and the 6 dimensions we talked about, we briefly spoke about 2. I hope I was able to excite some interesting ideas with respect to your own ecosystems, with the kind of challenges that you face. I hope there'll be an opportunity for us to talk more in detail, that have been able to generate enough interest for you to say, hey, why don't you come back to? And we'll be delighted to meet you at your time and convenience at your place in whatever way you tell us. We'll be very, very thankful if you can share your kind feedback. It will help us use your time next time. Whenever we meet you, we invite you again. It will help us improve our product. It will help us together improve the reliability and resilience of the extended external ecosystem that we are building. Thank you so much. I'm now open for questions and really appreciate the patience that you have shown.